Hey folks out there, chances are you're watching this video right now because you Googled something about single premium life insurance or single premium whole life insurance or something to that effect. If you didn't Google that and you're watching this video right now, then you're in the wrong place. But if you did, stick around because I'm going to tell you a little bit, some information about single premium whole life. And my first name is Rob, and I'm actually an insurance agent. Have been for about the past 16 years. And I'll tell you what, I'm multi-state licensed. Chances are I am licensed in your state or have a connection with a trusted agent in your state, and can probably certainly work with you, help you out one-on-one, or give you advice, whether it be over the phone, online, or in person, depending on what state you're in. But anyway, let's get to the nuts and bolts of single premium whole life, because as the name implies, you put in one single premium. A lot of insurance, whether it be term or whole life or whatever, you pay a premium every month, every quarter, every year that you have that insurance in force. Whereas single premium whole life, the convenience is basically you put in a one-time payment, and that actually generates a life insurance, a death benefit for your beneficiaries. And in other words, that's the amount that your beneficiary would get. And what's kind of neat about this product is that typically, depending on your age, you can potentially double what you leave to your beneficiary. In other words, let's say you put, and I'm actually using a real example here. I'm looking at a rate chart here, and I'm just going to pick out a female age 65. If she were to put in $100,000, okay, and again, you don't have to put in $100,000. You can put in, 5, 10, 15,000, whatever you want. I'm just using $100,000 because I have the chart here. She would automatically leave to her beneficiaries, God forbid something happened, she would almost double her money. In other words, $192,000 and some change is what her $100,000 would become once the contract is approved overnight. In other words, there is no investment, no safe investment that you can do that overnight. There's always risk, without a doubt, whether you're playing the stock market, you're playing, hedge funds, gold, whatever investments you're into. There is no safer way to double your money overnight than a single premium whole life, at least something I'm not aware of. Again, maybe real estate, you could do that. But again, this is a safe investment, and I want to call it investment. That's the wrong word, because life insurance is life insurance is life insurance. I don't want to mislead people that it's an investment. However, it does have investment qualities, if you will. So again, if you've got money in CDs, you've got money in in the bank accounts, savings accounts, whatever. You got money just hiding under your pillow, just sitting there, and your number one goal is to maximize your estate. As a matter of fact, this is actually called the Estate Maximizer, this product. And unfortunately, I'm not allowed to say names of companies because I haven't gotten approved. Even though I am an agent for this company, you have to jump through a ton of hoops to get these things approved, especially for advertising online. So you'll just have to call me, and I will give you the company I'm talking about. I actually work with many companies, so it's very, very flexible. But again, if you're younger than 65, you could potentially leave even more to your heirs, transfer that. And the cool thing is this, with single premium whole life, the death benefit goes tax-free to your beneficiary. In other words, it's going to avoid probate. It's going to avoid all those things that usually money gets tied up with. This goes right to your beneficiaries directly. So the other kind of neat things about single premium whole life is that you're going to get an interest rate. You're going to get this one here. The floor is 3%. So every year this is going to grow by 3%, which is kind of neat. And that's kind of the investment feature I was talking about. But if you're looking for like an equity investment or something indexed or something variable, you're barking up the wrong tree with this product. This first and foremost is for, sorry, I was having computer problems here, is for people that want to maximize what they leave to their beneficiaries. So anyway, there's also LTC, long-term care components to this, which is kind of neat. You can actually, I don't want to get into it, but you can actually use this. Gosh, God forbid you go into a long-term care scenario. There's a bucket of money, actually a pretty big bucket of money that you can use, you can leverage to use for your long-term care. And in this scenario, let's take the woman that maybe invested $100,000 into this. It's actually much more than that, and I'll get into it one-on-one with you over the phone or online or off my website, whatever you want to do, however you're comfortable working with me. But bottom line, this has got some really, really neat features. Also, like I said, hey, the money is going to grow. Let's say a year down the road, though, you have buyer's remorse or an emergency came up and you needed the entire, again, I'm going to use the female as an example, you need the entire $100,000 back. You can get it back surrender free. In other words, you are going to get the entire $100,000 back. Unlike annuities and some other funds where there's usually penalties or surrender charges, 99.9% of them out there do actually charge you a surrender fee, and then you don't get back what your initial principal was or your premium was. This you get 100% back, which is awesome. And actually, after 5 years, I believe it is on this product. Let's say you had growth in year 6. In other words, the first 6 years you had interest compounding on that. You're actually going to get not only the initial outlay back, but you're also going to get some of the growth back. They are going to impose a surrender on the growth of it, but hey, you may actually get back more than what you put in. So either way, you're never ever going to get less than what you put back in. Again, if you did need the money, you probably shouldn't have put this amount of money into it to begin with. However, emergencies do arise. The other thing is that you can also take loans against this policy. So you don't necessarily have to take out the cash value, the principal of it. You can take loans. So there's many, many options, and you can take those out without any tax consequences. The only consequence would be to your beneficiaries. If you had an outstanding loan, they're going to deduct what the loan was minus the death benefit. And again, I don't want to get too much into that. This is just kind of a broad overview of single premium whole life. But there is many, many really neat features of single premium whole life. And the cool thing is, unlike traditional life insurance, they don't do up to a certain, I believe it's 100,000. Well, actually, it depends on the state, but let's just use 100,000. Up to 100,000, they only ask 5 medical questions, and that's it. In other words, it's what's called simplified underwriting, and this is with an A-rated carrier as well. So it's somebody that you can trust putting your money with, which is very, very important nowadays. So anyway, if you are interested at all in this product and learning more, you can give me a call, 860-268-3953. I will also throw up my website there as well, and you can check that out. It should be popping up at some point. And anyway, like I said, I mean, you got really 2 choices. If you have money laying around in CDs, bank accounts, savings accounts, checking, whatever, you can either leave it to your family and maximize what you leave to them, potentially double what you leave to them, or you can give it to this guy up here. So it's really up to you what you want to do. Again, you can maximize and avoid taxes, or give it to this guy. It's really, again, up to you. So anyway, I'm done talking. Hopefully you're done listening. My goal was that we finish at the same time. So thanks so much, and don't hesitate to call me, 860-268-3953, and my advice is free, so take it for what it's worth. Thanks so much, and we'll see you soon.